Well, we are back with Kash Pashootan for a closer look at the Magnificent Seven and why he favors the Canadian stock market over perhaps the U.S. alternatives. What's your case to be made for the U.S. stock market or for the Canadian stock market?
Well, and I think, Paul, this is big for us because in over a decade of being on the show, we've always seen more opportunity in the S&P 500 than in Canada.
Right.
The last couple of years, it's been more sort of close, and now we've turned the corner, and we clearly, without a doubt, are favoring the Canadian market. The timing seems perfect in terms of buy Canadian, but it's really from an investor's perspective. We see the Canadian market, the Canadian economy well positioned as we think 5 years out. And so from an economic perspective, well, the first thing I would say is think about the fact that we're starting from a very negative, bearish sentiment. You know, Canada for the last few years has just really been sort of underwater as it pertains to business confidence and economic expansion. So we're starting from a very low point, which leaves a lot of upside potential. And we see change in that economy. We all know that there's been a change from a political perspective. We'll see what happens with an election, but many are expecting a more pro-business environment.
And just, do you see the political landscape as favorable under a conservative or a liberal government at this point with the new prime minister?
Look, I think that the hope is that even if it continues to be a liberal government, that Mark Carney will have better business acumen and be able to do more for our country than Justin Trudeau could. I would say that the masses certainly believe that a conservative government is going to be more pro-business. I wouldn't disagree with that. I think, but in terms of just the overall landscape, we have that shift in political leadership. The second is that with all of this trade tension talk, it really is sparking the idea of structural reform as it pertains to our economy. So something as simple and complex at the same time of removing interprovincial trade barriers, the estimates are anywhere between 4% and 6% GDP growth. So I think that's significant. And let's not forget, we're in an environment where interest rates are also coming down. So all of these factors build a strong base case from an economic perspective, and how that translates into the market. Well, first and foremost, valuations. So when you look at the TSX versus the S&P 500, there's a wide gap in terms of valuation. You have the S&P 500 trading at around 21 times price to earnings, and the TSX is at 15. So remember, making money and seeing appreciation on your investment isn't just the growth, it's also what are you paying for that asset? And if you're able to buy the asset right, there's often upside potential. And so at 15 times, valuations look much more compelling in Canada than they do in the US. And then when you add the currency factor, right now, the Canadian dollar is about 10% lower than where the historical average is. So if you buy a stock and the stock does not appreciate even by $1 or by a penny, but the currency works in your favor, you can have high single-digit appreciation just from the currency. So you have that working in your favor as well. So we do see a fairly strong landscape from an economic perspective, and then translating into a market perspective as well. And from a risk, I'll just add, in Canada, the Magnificent Seven are very magnificent when it's working, and they're detrimental when they're not, and we've seen that in the market. And so Canada doesn't have that same concentration risk. We don't have 7 stocks representing basically a third of the overall market. So the economy is starting to take shape, and it'll take a bit of time, and it won't come without hiccups, but we see change. And as well as in terms of the market.
We don't have 7 giant stocks dominating the Canadian stock market, but we do have a couple of sectors that really dominate it: the banks, the energy sectors, and most recently, I'm just looking at a screen now of the S&P TSX Composite, the most influential stocks so far this year, and heavily populated by gold and precious metals miners.
Absolutely. There's going to be, I would say the concentration risk is less about companies, and it's more about sectors. But if you look at the Magnificent Seven, you could argue that they all somewhat trade in the same sector. Whereas for us, we have sector concentration, but at least it goes from financials all the way to commodities, and even, you know, somewhat in the, we'll call it sort of consumer space. When you look at Shopify, it's a big influencer of the TSX market as well. But those are all different sectors, whereas the Magnificent Seven, we know, is very much one sort of business group.
That's Kash Pashootan, and the several reasons he likes the setup for Canadian